how's it going, folks? Welcome to the midweek trading room for October 5th as we get into a new month. It was neat to do the Monday market update as October came in pretty much as bullish as it gets. I think it set a record, like the biggest two bullish days or the start of the, I guess is this the start of the fourth quarter? Oh my goodness, it is already. But one of the strongest in history, but it looks like it's about to fizzle out. Well, let's jump into it because I'm going to give you my 2 cents, and I want to talk about some trades with you guys, and I'd like to read some of the stuff you guys are looking for as well, and your opinions, right? So take it for what you will. We can share, but hey, just be responsible. So what do we got? A huge surge in the markets over the last 2 days. Love this quote. Heard it from Corey. I'm sure he wasn't the one that coined it, but bear markets have the largest bull moves, and that was not the exception at all over the last couple of days. Geez, guys, what was it, 6%? It was well over 5, I know that, in 2 days. But now the markets are a little bit of a hiccup. Now, sentiment, I just kept it as bearish. I was going to change it saying oversold bounce, bottom fishing. I was trying to make things up. And then I listened to the recap that Corey did yesterday and saw that there's no way we can't be anything but bearish because it's not just here in the U.S. In fact, we're much stronger than a lot of economies around the world. In fact, as we move down to the economic data, we are seeing signs of slowing in manufacturing, job openings, factory orders. So yes, we are going south in the correct areas. However, I just read as I was building this class, why it took me a little bit to jump on, is the trade gap. Our trade gap is actually increasing our GDP strength because, not that we're strong, everybody else is so weak. We know what's going on with UK. They've got their problems. A lot of those European countries are dependent on Russian oil. We've seen oil go nowhere but north. OPEC's thinking about tightening up the spigots, but boy, you'll see here, folks, I think oil's up over 9% over the last 3 days, or just shy of 10%. So there's a big move there, and it's actually hurting what the Fed wants to see in our GDP. It's keeping us from slowing because everybody else is much slower. Isn't that weird? It's like we're trying to run a race and we're not trying to win it. So we're going to slow down and let somebody catch up, but everybody we're racing is also slowing down. I guess that's a weird analogy, but that's where we're at. So a slew of trades, and I was really excited to go through some of these lists, folks. One of these trades came all the way back from the 14th of September, and we've just carried it forward to the 20th and the 21st. I saw these on. These are updates and end of days that I'm getting these from, so I do like them. One BTU actually went up to the bull side from neutral, and Citigroup went from the neutral side down to the bear side. So a couple things have been moving, but a couple that I do like is Snow. Snow was something we were kind of sideways to bullish on, and it's back to sideways, and same with Coin. So a lot of these trades are doing really well with the picks that we've had them here on the Wednesday class in the first place for. So good work, guys. All right. Let's stretch this out, make sure I'm not going to miss any comments. Okay, so let's just jump into a couple that I liked. Etsy I thought was pretty cool. I like how it's gapped up above both of its moving averages and it's kind of parked itself there. Now, going to the bull list, the reason why I put it on the bull list is because of the 4 or 5 days previous to today. I like the fact that it's already back up about the 105. Sure, we got a 2050 crossover, but they're both sloping upwards. So it's more of a sustainability level around the 110. And if it could stay up there, then I'll really like to get into it a little bit more bullish. Now, let me go ahead and draw, because I like to draw with this class. We do have a little bit of a slope here, right? So we could make the argument that it's in a downtrend, but this also looks like a flag pattern, doesn't it? And a breakout of a flag pattern is usually going to be somewhere up in this 115 level. So it's a little early yet. In fact, I think I've got a couple that might be a little early, but I'll tell you the ones that are early, the ones I'm thinking of. But if you truly believe that, hey, this bounce is going to sustain itself, we might get a little bit of a head fake. I'll address that here in a second. Then this might be something you could slow play sideways to up between the 110 and the 115 level. Might be kind of a cool trade. All right, moving on to BTU. BTU is strong because of basically. Energy is strong. It's holding in there as well. This isn't a race out and buy, but I do like it because it's in an outperforming sector that is pretty tumultuous as of late. It has those same 5, 6, 7 days ago just shot straight up, but it's still higher than both its moving averages. A big outperformer, not only sector wise, but stock wise as well. So, what do we do with this? Well, you could play it sideways if you believe that we're going to sustain or this rally is not over yet. And wait for it to get above the 28 level, or you could play it right now sideways to up between 26 and 28. That's right. I do have bull trades. There was actually a few of them. Now this one it's great. This is Schlumberger. We love Schlumberger. It was on our watch list for a while, and then you could see it fell out of favor. Let me get my pin back. It just didn't hold on to that support level here. And so I was thinking symmetrical triangle breakout, didn't make it. The market's corrected, but it hung in. It stayed above that previous support. Now it's right back up. It has that big move. It's in the right area, energy, oil, and gas. But this actually does have news with it. I think it's merging with another company to produce something. And boy, it's definitely in favor right now. So I do like it as a breakout. I'm not sure about targeting up to previous levels. Let's get up to these pivot points here, just below 44 that it's set May, or all the way up to $50 that is set at its peak in June. But a slow play, I mean, I could see it actually get to that 43.5 level if it continues this surge that it's on right now. So diagonalize if you want to play that. Straight calls on this might be an easy way to manage, and because it's not too expensive. Today's going to be a hard day because the volatility is up on it because of that announcement, so you might want to let this kind of mellow out a little bit before you get on it. But yeah, there are some bull trades out there. So let's move on to the sideways stuff. This is Snowflake Technology. We did have this on the bull list. I did like how it broke out and kind of retested this level. It was moving higher. I'm trying to see where we put this. Maybe around this pivot point, I think we had this on the bull watch. I know Rob actually brought it back up too as well. So it's back up into that situation, but you can make the argument of sideways. It's a pretty good range sideways if it can stay above that 180 level, or at least come back and maybe retest that 170 level. So if you wanted to go big on this bad boy, you could do 170, 180, 190 butterfly and see if it can't just kind of bounce around here over the next week or so. Or if you want to lean a little bit more to the bull side, see if it can stay above the 180 level today and maybe shoot up to the 200, 197, 198, somewhere around there. So it still has its bullish potential, even though it does adhere to sideways pretty good. It really does. Coin has been great. It's been a really good sideways play for a while. Great job. And it looks like it just wants to stay there. So I was saying between the 80 and 60, pretty wide. You could pin it somewhere at the 70, and it's right back to it. Comes back, touches that 60, pops out. A little bit of a inside day going on today. But boy, after that gap up, you think it would hit the 80. It didn't. So 60, 70, 80 butterfly spread. If you're a little bit pessimistic, you can make this argument. I do believe I've drawn this line before, all the way back into May here. But it could revisit that 60, so somewhere between 60 and 70 if you're a little bit more pessimistic. But it's holding in there pretty good. Nice trade. All right, let's get to the bears, as there was a bunch. One that just came out of nowhere, and I kept this chart zoomed out because Coca-Cola is just free falling. And it does have some interesting support levels that we can take a look at and investigate all the way back to the end of 2021, right? We've got a little bit of a pivot point back here in December here. It hesitated in, that's December. Sorry, folks. Boy, that's November of last year. But it gapped up from that point. Now, if it revisits this, let me draw that line, where it's pretty much at right now, this could slip back to some of these levels. Now, Darren made mention of something very interesting on the trading room on Sunday, that we've given up 2 years of gains before the last couple of days, right? As of Friday, we had given up pretty much 2 years of gains, and I see Coca-Cola on its way to do the same thing. So maybe a slow play. I know it's super volatile as of late, but something you could play slow or even credit-wise to the downside. It's interesting because Coca-Cola is actually a defensive stock and usually does pretty decent. Well, actually, I got to do a little bit more research on that, but I would imagine we do a little bit more decent when it comes to recessions and slowdowns. That might not be the case moving forward. So let's take a look at BABA. This is another one. I said a little. I was going to tell you the ones that are, I believe, are a little early yet. This is a little early yet, and the reason being is because it's got this beautiful doji going on. Now that might have changed even since I took this snapshot a couple of minutes ago here, maybe 20, 30 minutes ago. Let me get my line. There we go. I just love this coming back to that 85. You can see it had a little bit of a problem back here in the same times that most of these charts had. We'll have to see how it finishes. I can't wait to pull the class because I've got two outlooks when it comes to these markets moving forward in the shorter term. But if this could confirm this doji, a move right back down to that 76 level would be pretty quick to have happen. So that's a cool one. A little early. Keep it on the watch list. Wait for it to confirm. Here's Match. We've seen this a few times. This came from you guys. This one's actually kind of confirming. So it's got that doji yesterday, and it's actually rolling back over. This thing has been just superly patterned. I mean, these beautiful arcs. And so I'm hoping, waiting to see if this confirms down here to a nice target back down to 45. So those are the ones I like the best, but please take a look at the ones that I had posted. They're all great trades. It's been a while since I've seen, on a Wednesday class, since I've seen that many trigger in both directions. The sideways ones are looking good. The bear ones are definitely more of. And then some of the outperformers that we've seen over the past weeks are still holding on. So it's kind of this nice little perfect storm right here. It just depends on what you guys want to do and your outlook. So let's get into outlook, right? Market analysis time. It's been a pretty aggressive. This was a fun one to snapshot because this is Monday, Tuesday, and half of today. And I know today that we're down. Well, we were down. I think we're down a little bit. And we're still up for those 3 days substantially. I think we're down over 1.5%. And these are still posting over 4% on the diamonds, the SPY, Qs and stuff. The Russells did really well, but look at oil. That's oil there at 9.97. It might be even higher or lower, but just a huge surge. And that's just pretty much worries about supply, worries about slowdowns. It's that flight to safety when people get bearish or nervous. Gold as well, 3% move in precious metals. Wow, that's interesting. You figured the opposite would be true. The dollar's been killing it for a while, but to see a surge like that, that's kind of it's kind of panic. It was kind of neat because we also saw the VIX up in the mid 30s, right, low to mid 30s. So it should be to be expected. So let's just jump into these charts. We have been waiting for that bounce, and we got it. Maybe sooner than expected, but the expectations were for a bounce. I didn't think it would happen on Monday and then Tuesday. And here is the million-dollar question, and I'm pretty excited to ask it. And I can't wait for the poll here, but is it over? It sure feels like it this morning, didn't it? But just as much as we saw Friday give that head fake, I truly believe we could turn around and close green today. We could. Or we fall apart, turn red, and then tomorrow morning we gap up. So head fakes work both ways, right? Head fake to the downside on Friday. We could get a head fake on the downside today. Or the head fake that took us into Tuesday and probably washed out a whole bunch of shorts. And that's what these oversold bounces do. That's what these large percentage bounces do. They will flush out short positions. They will squeeze margin and create people that have to actually buy to cover. And when they do buy to cover, you get these huge moves to the upside. Hence, big bull moves in bear markets. So, was that it? Did it just take Monday and Tuesday to flush that out? Or is there more to come? So, I'm in between both of those. I don't know which way to go yet. But I've got levels to take a look at. The first one is going to be pretty obvious. It'll probably be the revisit of the floor of June. That's going to be my confirmation to the downside. I know that sucks because it's another gap to the downside. Maybe it takes 2-3 days to roll over. But hey, we know where we've been, and we know that we could leak much, much lower. So my probabilities increase if we can re-break or retest and break June's low again. To the upside, there's got to be a consolidation, a hard push up to this 380, and it needs to pin there. And we saw this, we've seen this before. We saw this market. Let me go ahead and erase and redraw some lines. We saw this market come off of that huge disappointing CPI number, established a little bit of a home base here for a couple of weeks. Look at that. Into July, and it finally gained enough momentum to break out. So we are going to need to see, let's go some circles, this similar situation somewhere in this area, or we're going to get another move lower. There you go. You're welcome. I don't know if that's true, but that's kind of where I'm leaning or looking at when it comes to these markets. Diamonds is the exact same. I'll just get through these a little quicker. This one's actually back up to using June's lows as resistance. It's a lot more ominous than the SPY chart. So this one has to pin itself where it's at. You can see right now it's a little bit of a green candle because it's off of its low, but it's still weak so far today. And then let's jump over to the Qs. And the Qs are kind of this very similar situation as the spiders because they are already above the June low. It's got the same argument to be made. It's got to do something like this up in this area before it can move higher. But if it breaks down below that June low, let me get a straighter line here. Then I'll be looking to get into some more bear trades. It's kind of cool because being in this situation with all three of the markets, we are getting opportunities up and down. So even if these markets do consolidate here or a little lower, they don't have to consolidate on these lines that I drew, a little lower. We could see continued weakness in some of those stocks that are still falling apart. And we could see continued strength in some of the ones that are doing really well. So we can have that balanced portfolio if these markets decide to chop around and go nowhere, right? We just need that volatility to calm down a little bit. Okay, so let's take a look at the economic data, and this has been a pretty fun little ride because we're starting to see the things that I want to see. We're starting to see slowdown in some of these larger numbers. Let me change my pin to pink, just a little bit more vivid. Whoa, okay, construction spending. So we got a drop in that. I imagine that's going to be seasonal. It's really warm. We're still in the fall, or it could just be expectations of a slowdown. Or it's been super high, so it's coming off of highs. Here we have manufacturing going a little bit to the south. The PMI did tick up a little more than expected, but it's in line, right? So it's not just racing off. Job openings actually ticked down a little bit, right, from previous levels. Quits pretty much the same, but factory orders. The core capital goods revision actually ticked up. I'm trying to think where we're at. Okay, so that's it so far. And then the ADP employment report. So 200,000 is this base low level of inline. Expansion is above that number, and contraction is below it. So it's a little bit of a tick up from 208. 185 was a lot lower previously. So it was to be expected, but it's not much higher than that 200 median number. So here's the international trade balance, and this has stayed in line. It was lower than it is now. And that was what I was discussing earlier when I said that, hey, all the other countries are so much weaker, it's actually helping our balance, which could increase our GDP and show that we are still in expansion, right? What a weird sword, double-edged. So services PMI in line. So I'm drawing all these lines for you, and you gotta watch me draw lines. Service index ticked down 569 to 7. Expected was 6 in line, but that's fine. So we're all going. It's going in the correct direction. The ones that we have to focus on aren't really out yet, but here's some we can take a look at. I'm going to be focusing on the non-farm payrolls. I need to see contraction in this. Unemployment rate is going to be a little bit delayed. And then where was the other one I was looking at? It's not on here, but the CPI would be a good one. All right, there you go. Joe's Economics 101. Whether they're correct or not, it's my opinion. So let's pull the class because I want to know your opinion now. Okay, yeah, and it's kind of going the way I thought it would so far. Let me go ahead and finish this poll as I'm answering this because I got 94% voted. So awesome. Thanks, guys. Let's close this and I'll share it with you. And as you would expect, pretty much flat to down. A lot of parking it here, and that's interesting. 33% plus 1, 53.0, 47% negative 1. Now, I think what we're seeing here or expecting, I'll get back to your comment here or question, Scott, is are we done with the bounce or not? And that's exactly where I'm sitting. Let me go ahead and hide this, and I'll get to that slide. So are those numbers priced in? Move down. Let me get these sliders going. I had to go a little deeper in my monthly outlook. It was a -2. I'm at -2.5 because of this rally. This rally is what I was expecting. This rally is that bear rally that I needed to sell into. Now I can't do it yet. I can't do it yet. Now I'm at a solid 0. I clicked over thinking the animation was there because I want to be a -2 the week at this week, but I just don't trust today's candle yet. So I'm right with you guys. I'm right at that 0 for the rest of this week because this might just be a little bit of a head fake. All right, so hopefully that helps you, Scott. Great question, by the way. And let's get into the sector analysis because this is exactly what you thought it would be. For the week's performance, now I showed you Monday, Tuesday, Wednesday, and the markets are still pushing 5% gains even with today's move to the downside. But if I go from Wednesday to Wednesday, consumer cyclical, utilities, well, let me get to the buttons here. There we go. Energy at 9%, including any of the corrective action that it had previous week. So it's flight to safety again. Absolute flight to safety. So biggest gainers and losers, let's get into it. This is energy. And you can see it has that same pattern that I showed you on BTU, some of those bulls that we're looking at. Take a look at the last 6-7 days. It parked itself and then boom, it's just shot up straight and it's above its averages, looking pretty good. And then on the weak side, we got the consumer cyclicals. I like to use the IYC because it's consumer discretionary versus the XLP, which is staples. And you can see that even with that massive rally Monday and Tuesday, this thing didn't even get above the previous high that it set Wednesday of last week. So just struggling. So that's what's so great. And this just kind of shows you that all those energy companies that we've been looking at over the last few weeks, and then all the consumer companies that have been going down, they're still doing the same thing. So it's kind of nice to see that the strong are staying strong and the weak are staying weak. That's why we have so many things to look at. So in conclusion, we got, or are getting, right, based on the poll of the class of my outlook, we still are believing that there could be a chance that this bounces. We stay flat here, and tomorrow we could gap up again. There is more room to the upside. So that we got the bounce that we expected last week, but it's still happening. So if you're bearish, be patient with this bullish surge. You can get head faked. We got head faked on Friday. But if you're bearish, you should stay in it because the overall motion is still to the bear side, definitely. If you're bullish, if you want to play this bounce, you've got to wait for consolidation. If it can't hold on to some of these levels or revisit or penetrate some of those previous resistance levels, it's not going to happen. Now, if you are bullish, don't expect to knock it out of the park. This isn't the bottom. This isn't going to be, hey, the day that in 2025, I'm glad I bought it today because that was the bottom. It's going to be tumultuous. It's going to be brutal. I think back to Scott's point or Scott's question, all we need is 2 or 3 big companies to miss and project even lower, and you'll see a bunch of repurposed money out of that market. So keep that in mind. Sentiment bearish. Just be bearish. I know I've got a lot of traders. What if, but, and, or look at this move. What if I just play tomorrow's gap and then get out early? No. You're just guessing. Overall sentiment's bearish. Nothing good's going on anywhere. Inflation's still an issue on consumer, but this is what I wanted to say. It was jobless claims, the ADP employment number again next week. Let's see if that doesn't tick up or it stays flat below the 200K. And then the CPI, because we've seen reaction to that. Housing is going to be a big one too. All right, that's it. Let's jump out in the markets and take a look at some of the trades you guys want to. All right, here we are. Let's jump into these markets and take a look at some trades. So as I've been blabbling, it hasn't moved much. I took the polls, or I snapshots of the charts back at around these areas here, so you can see that the markets have moved a little higher since some of the data you guys have been seeing on my presentation. So in case that matters to some of you. All right, let's go back up and find out what we're looking at. Joel, start us off here. He is thinking of, let me read it, ALNY. And it's going to be, he says you're waiting for something on it. Let me go back and read here. Ooh. Zooming in. waiting for a confirmation of breakdown on this chart, so I don't have a trade yet, but it's on my watch list. Target of about 160 range. Yes, I like it. Very nice. Look at this thing just trying to hold on to it. That just sell slope, descending triangle pattern. Had whatever was really good, and it looks like it's kind of fizzling out. This will be tough. You've got a pretty good support level at the retest of the gap. So here's the initial excitement, and then the next day it gaps down to here and comes running back up. So this will be your low line in the sand. But as you can see, folks, that's a $185 $185, 190. So that's, you know, $7-8 away. Well, that's a pretty good trade if you want to just do something sideways to down on that. But yeah, waiting for the confirmation below these would be cool. But if you really wanted to see if this is going to start to fill the gap, remember, folks, it's going to have to slide a little bit further, and it's a big mover. So I'll keep it on there. Let's take a look at it. Be patient. I like where you're coming from with that, Joel. I like how you say, I'm waiting for confirmation. Yeah, so just wait. It'll be very nice. All right. Good. Let's move on. Okay, Justin's got PLD. Bearish setup. I'm already in the 90, 95, 100. Let's take a look at it. It is so funny to me that I have to remember to zoom in on these charts. They have moved so much. Like a 6-month outlook on this is, it's almost too much. Okay, 90, 95, 100. Cool. Targeted. Right there, right there. Yeah, it looks like you're, if you're in a little bit early, and that bounced up, but I like the rollover. Sure. It looks like it's confirming in a little bit of a bear rally, a pretty weak one. So yeah, revisit down to the 100, and then hopefully can break down there. Let's see, probably a trend line to get there. That makes sense, or maybe Fibos. Let me put it down. PLD. All right. Real estate. We don't know what's going to happen. It's going to be pretty interesting to see how that market reacts, because these interest rates aren't going up slowly. They're going up very, very quickly. It's just a slam on the brakes, so we'll see how that rolls over. Obviously, just take a look at this chart here over the last end of September. Crazy, right? All right, Toll, another house. Home builder, I believe, right? Toll Brothers, what do we got on them? A little oversold bounce, squeezing out some shorts. Looking at a sideways play. All right, Dan, 43, 45, 47. Put butterfly, 43, 45, right where it's at, 47. Okay, yeah. Sure. Playing it right around that decreasing 50-day moving average. You do have a nice resistance there, 46, right? That's its resistance level, and it could roll back down to the 44 level. Okay, I like it. Can I put that down? I'm going to do sideways, and then I'm going to put a little bear mark on it, because if this rolls over, that might be a good one. Yeah, and he's using puts on this, so the expectations of sideways from here would make sense. All right. Thanks, Dan. Let's move on to LNG. Some energy. Yeah, this one's very similar. It's got a big red candle though on this here, but diagonal call spread makes sense, Connor. Let's do what's he got? October 175, November 165. 75, 165. Where did we get that backwards? October diagonal call spread. Yeah. So a 165, 175 would make sense if this was October and this was September. Oh, wait, August, November. Thank you. No, Connor's correct. You know, folks, November comes after October, right? I didn't know that. No, I was thinking September. Sorry, Connor. No, that's great. So he's going to slow play this. He's got October, probably brought in a bunch for that 175. And then he's got the 165 in November, which comes after October. Thank you. No, I like it. Let me put that down. LNG. Cool. Great trade. Yeah, it's just the way that these bounced off of how hard they bounced here, right? And this was almost this expansion range, and it's back up to this area. So yeah, it can play, it can chomp around all at once. As long as you get closer through October, it'll be nice to see it move its way up to 175. Awesome, thanks. What's next? Justin Scott W. All right. Bear put 35.32 on October 14th. 35.32. Real tight. I guess I could zoom in there a little bit more. Let me do that. Keep have to bounce out of my mouse. From my pin to my mouse. From my pin to my mouse. Yeah, okay. Okay. I'm cool with that. And let me check that. Is the 14th the regular expiration? Or is that, no, the 21st is. So a week and a half from today. Cool. Nice. Just looking for a real quick one. A couple of bucks. Easy peasy. Thanks, Connor. Or Justin. That's a good one. Kind of fun. All right, Dan's got another trade here. The one we were just looking at, but he's thinking we got a play on Etsy. I do like it as that sideways to up, but I think Dan's got a sideways plan. Let's take a look at it. 109, 114, 114. These are hard to drive. 114, 109. I'm trying to get close. And a 119, so just under the round numbers, right? Okay, yeah, okay. Probably play in this area. Excellent. And that is October 14th, a week and a half. Excellent, right? Etsy's been on the sideways list. It's gotten the bull list. And this is sideways with, what do you got in there? $4 move to the upside between 110 and 114 for your target, your max. That's great. I'll just put Etsy on the sideways. Sure, because it's a sideways play that we're sharing. But that's great. Thanks, Dan. All right, guys. Let's move it forward here. Blackstone. And I had, let's see, did I have Citigroup up there today on the bear? I think I did. And I didn't share the chart because some of these financials can hang on, but it doesn't mean that there's a ton of them out there that could be a nice little bear trade. So this is a bear call. Okay, cool. A little bit of a credit spread. Got a little sideways element. What do you got here for us, Mesman? 86, 89, 85, 86 is going to be about right there. And 89 is going to be about right there. She just needs it to spill over into this area. That's what I'm believing. It's not bad. I like it. The inside day to day is great. This is a very bearish pattern if that can turn red. I mean, it is red because it's below the previous day's close. But when you get a body, that's fine. But an inside day is usually an indication of a reversal. Hey, this is the only thing that you got to worry about is that 90 support. So if that can slip below that, then it might bleed itself. It might just get right back to 85, which at that point you're still happy. Cool. The more that I look at the price action, it's right back up to the opening levels. The Dow's actually exceeded it. So we could get that little sucker punch, another fake out to the downside, and this thing rallies back up because maybe this bounce is not over. I am in no hurry to put any of these trades on. I have been having a real cool time yesterday and today building these. We've got so many to look at. So this list is nice. So this thing could go all the way back up. I don't care. I've got bulls to buy if it's going to continue. Or it could roll over and fall apart. I don't care. I've got bears. Little early yet, but this is the first time in a while, folks, that we've had this class to where we've got some pretty good trades to take a look at. And we could get ready to maybe throw a couple of darts out there. So I'm thinking it's going to be a lot of fun. Let me go ahead and write these in. Pretty good list. Obviously leaning towards the bear side, sideways to down. That's great. That's fine. It's kind of what our poll was, wasn't it? Pretty much neutral to slightly bearish, even though there was a lot of plus ones up there, over 30%. So it's pretty cool. Thank you for joining me, and we'll talk to you next time. Bye, guys.